Bring in Scott Bauer, the CEO of Prosper Trading Academy, to get his thoughts on some of the most recent housing data. Scott, welcome. Happy Tuesday. A big week for housing here in the U.S. Thank you, Scott. And certainly a lot of focus here on the building permits, the housing starts. They feed a little bit into next month's numbers as well. There was a lot of focus on that NAHB number yesterday, topping estimates, and really showing signs of strength there. Talk to us about what you're seeing here in terms of, I guess, not necessarily market reaction to this number, but initial thoughts in reaction to this number. From what I'm seeing, it was a little bit mixed, kind of positive in terms of the permits, but somewhat negative in terms of the housing starts.
It definitely was mixed. The starts were about half of what was expected, but
Okay.
You know what, Ben, the sector has been so strong that, you look at this one and you say, okay, it's 1 month. Until you see maybe a continued trend, it's now really no reason for concern, but the permits number was very, very strong. This is a sector, probably amongst everything that we watch out there that has just been on fire, probably will continue to do so with rates really just kind of stuck in the mud. I know we're seeing rates tick up a little bit, but this is a sector that is not really cooling down, and I don't think that we can just look at this one number from the housing starts here and say, maybe there's cause for concern.
I like that, Scott. A little bit of cooler minds prevail here if anyone's getting too concerned about that number. And obviously, we do talk a lot about, again, one number does not a trend make, but let's talk about some of the trends that we've been seeing, some of the interesting trends, whether you're talking about purchases sight unseen or, again, the migration away from cities. I'm hearing about how the move out of New York City, for example, has just been historic in many ways and how it could take years for it to recover. I guess I'm wondering, Scott, if we start to see a vaccine, if we start to see some of the numbers start to diminish a little bit, if the second wave, for example, were to be kind of the last wave, would these shifts reoccur kind of in reverse as quickly as they came into fruition? I mean, ultimately, would we see a migration back to cities once workers start to return to some of the offices, or do you think that's going to be a slower process that takes a couple years to kind of get back to normal?
That's a great question, and I think we're seeing the same trend here in Chicago, Ben, that we're seeing in New York too, with the migration out to the burbs. I have a few very close friends of mine who are real estate agents in the burbs, and they just can't keep houses in inventory. As soon as something comes up, it is gone. So that migration is happening, and I do think that when we get a vaccine, when things start to get back to normal, we may see a little calming of that, but I don't think it's going to be the rapid move that we've seen, this migration that you talked about, back in from the urban areas back into the city. I just don't see that really happening.
We're looking at the home builders ETF here, Scott. My next question, would some of this momentum to the upside get derailed if we were to see rates start to inch higher, or if the Fed were to kind of back off from some of that supportive stance that they've seen, if inflation were to start to rear its ugly head? I mean, ultimately, rates play a major role in this, and lower for longer, in theory, is very supportive of some of the trends that we've been seeing. I guess I wonder if they were to start to inch up to the 2%, maybe 2.5% level, would that change things if we were to see inflation start to come around a bit?
Right, and that is a very big psychological point, right? Right now, with rates, just kind of fluctuating, maybe getting, ticking up a little bit, I don't think that really impacts the mortgage lending market at all. And I think that people looking for homes, as long as they can get a 15 below a 3% or a 30-year mortgage right around that 3%, maybe 3.25%, that's kind of a psychological threshold. But if we do see those rates starting to tick up in any sustained level, then yeah, that could put a screeching halt to this red hot market.
Yeah, not only the housing market here, we're looking at rates and how, lower for longer does seem to be supportive of indices as well. Scott, I wanted to get your thoughts on the Fed's balance sheet. It seems like it's been increasing recently. We have been talking about how it had been shrinking. Where does this fit into this narrative ultimately?
Well, the narrative still is we're going to do whatever we can to support this market for however long that we can, and I don't think that has changed at all, even though we are, seeing, a little bit pressure on bonds and rates start to tick up a little bit. Their narrative has not changed whatsoever. And I think that the Fed speak that we're seeing, whether it's from Powell or from one of the Fed, vice chairman, it has not changed whatsoever. So I don't think we're going to see the balance sheet really, flip-flop or change anytime soon.
Scott, where does the dollar fit into this discussion here right now? It does seem to be much like some of the other markets that we've been focused on, in a bit of a holding pattern.
Range bound. Yep.
Yeah, you've got influences on one side of the big pond from the UK-EU negotiations. You've got influences here in the U.S. from some of the stimulus measures we've been hearing about, and concerns related to inflation. Again, inflation, which still has not been necessarily present. But Scott, where does the dollar factor into this? Do we continue to see this consolidation, this range-bound type price activity, or do you see any catalysts on the horizon? I guess is the question that could break us out.
Yeah, we've been incredibly range-bound. Just a few weeks ago when we broke 94 to the upside, that was almost a shock to the system. And we saw what happened with rates. We saw what happened with gold when that happened, but that was very short-lived, and the dollar really, met very, very stiff resistance, and now is trading right back down to that 93 level. And this 92.5 to 94.25 is a very range-bound trade. There's not much that I see in the interim here, Ben, to tell me that the dollar can really strengthen much past that 94-ish level at all. So, in terms of inflationary pressures, in terms of how that affects the commodity space here, I see this range-bound trade, but if anything, towards the bearish side, not the bullish side at all.
All right. While you were discussing that or saying that, we took a look at the dollar versus the ES. A lower dollar certainly has been supportive of that. And here you can see on the weekly time frame, very much range-bound type price activity. Scott, talk to me in terms of what you're seeing here as far as the latest between the UK EU negotiations as far as Brexit, because if you're talking the U.S. dollar, it seems to me that could be one of the more influential factors in the coming weeks and months, assuming rates and some of the inflation narrative doesn't necessarily become more of a concern for investors. But, I mean, oftentimes we talk about how the EU-UK negotiations are the tail that wags the dog. It does seem like as they head into this very prominent deadline and ultimately what could be somewhat of a pivotal situation for their relationship, the two, and the relationship they share, could also be pivotal for the euro currency and for the British pound as well. Would you agree?
No doubt about it. But the question that I have, Ben, and I feel like that you and I have had this conversation for what seems like years and years and years, as we get to that pivotal date, as we get to the 11th hour of the negotiations, are we going to see an extension again?
Yeah.
If prior history is any indication of what may happen again, I don't think that's out of the question at all, that we see another extension. In fact, I've seen some news in the headline here saying that there's a very good chance of that.
Yeah, it sure looks like it, and price reflecting some of that, it seems like as well. Certainly not expressing a lot of concern here right now at this point. We're looking at the British pound on the left holding right around that 129 handle. The euro currency has been very much range bound, 116, 116.50 up to the 120 handle. Scott, this is a good look at the currency markets here, some of the fundamentals, talking housing and really across the board, a good breakdown as far as what you have your eye on, what we should be watching, and really what investors are dialed in on as well. Scott Bauer, ladies and gentlemen, thanks for joining us here this morning.
Thanks, Ben.
Scott Bauer is the CEO of Prosper Trading Academy, and